Good morning, guys. Welcome to this Thursday, April 17th, last trading day before the weekend. Tomorrow, markets are closed for Good Friday. And yesterday we had a gap down based on the Nvidia write down, the export restrictions on chips to China, and so Nvidia did a write down. AMD also had a pretty bad day. Well, the whole chip sector had a bad day due to those restrictions. And then, of course, Powell came in, and that's your big freaking dump where he stepped in and analyzed trade policy and made his predictions and threw cold water on the markets, and yeah, it started that sell-off. I don't think a lot of people are happy with him about that. He's just trying to stay neutral and just do his analysis there, but it's just when you step in and say stuff like that and set the market off to the downside, that's just irresponsible. It's very predictable. Anyway, so and he's talking about stuff which is uncertain, which is not necessarily in play right now. So that's the frustrating part of that. Anyway, so those two things yesterday, that set this whole thing off to the downside, and we had a pretty weak close. They closed way down, and they had nice. We did have a nice little snapback. We were all the way down here to the 52.50. Snapped back pretty good, but did not make it above that 53.15 level. Right back up to it though, and that was late in the session. In the aftermarket, they came right up to that 53.50. Now the overnight started retraced those single prints and came up pretty nicely. But before I keep going there, let me just touch on the news we have in front of us. So before we get going with that, the ES analysis, but today we get housing starts and permits, jobless claims, Philly Fed, all at 8:30. So everything happens at 8:30 in a few minutes, and that's pretty much it for news for the day. We have a nat gas report at 10:30, and yeah, that's about it. So all news happens at 8:30 today. Then we'll see how the market feels going into the end of the trading day. And they say regular close today. There's no early close, anything like that. Regular close. And then Friday is Good Friday, and we have Easter holiday. So as we were saying, this land, I don't know what this little pop was all about. You see a little pop right there? That's pretty violent. And some headline came out, 8 o'clock, boom, big pop, and then right back down again. Could have been a foreign piece of news too. Either way, as you can see though, we are back down here. So off the highs, back down in the middle of the range, trading right at this edge at the 5300s, right above it. So that's kind of where we are in the bigger picture. So the lower end of this range, you can see all the freaking stuff going down all the way down here to the 4830s. And there is not really any obvious edges on the way down there. I mean, you start trading below the 5300s, it really starts you can see you're getting a little bit more resistance the lower you go, but it's not an obvious edge. You have one volume edge here at the 5200s and a tractor here at the 5100s, and this volume here is not just that big. It's smaller tractor at 5000. So the even hundreds, you see a little fight going on, but that's about it. So pretty crazy stuff. So they start trading below the 5300s. I think the path down is pretty open at that point. So if they can hold that line, I would be happy. That would be a good sign. Yesterday we're down here probing that low, probing down here at the 5250s. The retracement before the close, it was actually a bargain hunt, to be honest with you. If you look at that, how that what happened in the close, it's active buying going on there, going into the and based on that weakness. So it seems like there is money buying, picking up, and the weakness is getting bought. It is just as soon as the overall selling dries up and there's no one left to sell, or except for those who are trading it back and forth. We may see this whole thing stabilize and maybe starts making see some cash come back in on from the sidelines back in driving this market higher. Anyway, so starting off range bound today. Given yesterday's move, I'm going to start with a slight bias to the downside. I'm going to watch this London high. That's a nice level, 53.70. So that comes out, we may have a shot at potentially trading back up again. But looking at the sell strength at this point at 53.40s, 53.60s up to the 70s for rotations back down. Looking to buy against the 53.20, 53.15s, 53.10s down to the 5300s for rotations back up. And below 5300s, well, bets are off again. We're heading lower. So a fairly range-bound start, I think, today. I would favor the short side given the yesterday's action and see if there's any sign of continuation on that. The late in the session buying like that usually doesn't start a trend. It's just people picking up stuff at the very end of the trading day and driving it higher. And that as you can see, that they did move it a little bit higher in overnight, which is a good sign. But I would still look for potential weakness here as the session starts and see if they can are going to try to take this lower. Now, if this actually the overnight is actually continuation of the little pop we had late session yesterday, and we see some continuation, they'll take out this 53.70 London high, and we'll see them start trading up from there. But at this point, as long as that holds, or they're not testing that upper area, I'm going to stay range bound, and I'm going to stay with a slight bias to the downside to see if they are going to try to take this lower. Now, going into a weekend like this, all this uncertainty, there's definitely a case to be made for weakness and people getting out of stuff going into the weekend. But also would be more traders, and that would be probably more temporary. But I don't see institutional selling doesn't happen. Like they don't roll out those stuff going into a weekend like that. But traders do, and there's big companies which are trading large amounts, which potentially gets out of it and late in the day. So we'll see how this develops. At this point, looking to sell strength, 53.40s, 60s up to the 70s. Looking to buy weakness, 53.20s, 10s, and the 5300s. Rotations back up. Then let's see, below 5300, we are heading lower. Above the 53.70, and we may have a shot at retracing this a little bit to the upside. And if you can get up here above this gap, we had this pretty good support there at the 5400s. If you can get back up above that, we may have a shot at getting a little bit more strength back, a little bit more momentum to the upside. But right now they're churning it, so I think it's a good case to be made for the selling has subsided. It's not free for all selling panic, but there's definitely no buying interest either. So there's churning, and this upper area here, that 54.80 to 5500s, important, nice volume edge there, and then of course the area congestion above that. So it's really between 54.80 up to the 55.80, 100-point range here where they really start running into trouble. And so far they haven't been able to trade up above it, so. We'll see. A couple of trade deals announced. Some positive news may actually change that, but so far we're going to have to wait for that to materialize. Let me see here. Okay, so that's the ES to get started. Looking at the bonds and the NASDAQ. Wait, there you are. Bonds and the NASDAQ. Yeah, I mean, they had a productive call with the Japan as well. So, well, today Japan is here for face-to-face talks, I guess. So they'll things start happening, and I have a pretty strong feeling that all these tariffs that they announced, it's going to pretty much not be put back on again unless there's some shenanigans going on. Like I just saw that China had signed some deals with Vietnam. And that can only be interpreted as they're trying to figure out ways to get around tariffs. So it just stuff like that, shenanigans like that probably can drag things out or cause some headaches. Otherwise, I think most of these tariffs are going to come down, never be put back on again, and trade deals are going to be done. And that's kind of the outcome you want, right? So when that starts happening, I think market's going to feel a lot better. So bonds back below 115s. And I'm thinking that they're pretty much trading in this low volume area right now in this general attractor area. So not going to worry too much about it. If I fold stuff together here, you start seeing a little bit more interest in what's happening there. So it's here you have these moves to the upside. So here we have these edges again. So 114.10, 114.10 to 115 general attractor area. We're trading right there now. So I would start off range bound on the bonds. They were trading higher yesterday. They pulled back a little bit in the overnight. But I think we have a pretty good case to be made. If they can get up above that 115.15, that upper edge right there above this low volume area, I think we have a shot at getting back to the 117s and the yields to come down a bit. And if something happens and the bond market gets upset again, well, yeah, then you're going to be seeing bond prices. They'll take out this lower edge here at the 113s, and below that, bets are off. So I'm starting off range bound on the bonds, looking for shorts against the 115.03s, 8s, and the 14.15s. Looking to buy against the 14.23s and the 14.13s for rotations back up. There could be an edge in between here. It get a little bit cluttered, so I left it out, but and then these are probably pretty decent edges, the 114.24 and 114.13 for rotations back up again. But fairly straightforward trading on the bonds if you trade it. And I don't expect much movement on the bond today, unless there is something happening, some news or something like that happening. Then anything could change. Looking at our Nasdaq. Nasdaq is almost a tad bit stronger, but not much. So they're trading above this gap. So this is where Powell stepped in it, and the whole thing started heading lower. That level, the 18,500. They are holding above that, so that's actually a positive sign. And as long as they hold above that, I think they may have a shot at seeing some strength on those stocks. Definitely, if they take out the 650, see the London high, I want to start thinking about the long side again, looking at see if that party can take it. But at this point, starting off in the same way as the ES, looking for potential weakness based on yesterday's sell-off and weakness. Now, the snapback on the Nasdaq was good. It was a pretty freaking strong. So they snapped back hard, back up to the 18,400s. And then watching in the capital flow side of things, this level right there, the 18,800s, they can get up above that volume edge. We have at least a decent shot of getting up to test these areas up here at the 19,000 up to the 19,240s. And they can get up past that. I think we may have a shot at a little bit of strength on the Nasdaq. So a couple of big hurdles, that volume edge at the 8,800s and then the 19,100 to 200s. So they're going to be big areas to watch. But there, I mean, there's like we're talking about 19 and we're trading like 400 or 500 points away. So Nasdaq keeps moving like crazy. So just had to hold on for the ride. But you see this pullback here on the Nasdaq, that was freaking ugly. So they were down here. They really shook things out right down here. And here's almost a little edge I didn't draw out here, the little volume edge right there, like there. So basically all the way down here to the 18,120s. And since then, they've been, and the snapback was pretty good, I had to say. That was a lot stronger than I thought it would be. And then they ended up closing at the 18,370s. That was the edge on the way down we were looking at, below that 18,370 edge. If you remember, that 5-letter edge, that 350 to 380. So that big edge right there is the one they've been running through a couple of times. So that's going to be less and less obvious. If I start to say, if I fold this together like this, it's still an edge, pretty obvious edge, but it's getting less and less as they run over. It gets less and less important, but it's still there. So 350 to 380, and that's the area we had to watch. They start trading below that, not good, not good at all. So range bound, I would start with a slight bias to the downside just to get started. And if they can't take out the lows and we don't see that weakness, I would probably be leaning more towards a range bound day. And then I'm going to be watching these upper areas, the 650s on the Nasdaq and the corresponding area on the ES, which is 550, 370. Now, if so looking to sell strength at the 580s and the 640s right now to get for rotations back down. One level outside the obvious on the Nasdaq 680. So 590s, 640 up to the 680s. Above that 640, I'm going to start thinking about the long side a lot harder. Still mindful that we may have one level outside the obvious there to pay attention to. And on the way down, looking to buy weakness, 500s, 450s, 420s down to that 350 edge. If they can hold above the 18500s, that would be a pretty good, that would be a pretty strong move. So that's the level before this Powell pullback. This Powell debacle happened yesterday. So if they can hold above 500, we're in good shape. But it's the 350 area on the downside. So if they do trade them below that edge, not the end of the world, but it's since they're trading lower right now. But if they take out that 350s, bets are off, and I think we're heading lower at that point. All right, so that's the Nasdaq to get started. Nasdaq, I think, has a better shot at retracing to the upside. And then finally, oil and gold. And gold moving like crazy. Look at that thing. Did mark up some new edges here, but they overnight all the way up to the 3370s. They are absolutely melting up. Pardon the pun. This is a pretty big move to the upside on gold. And that's oil. There's my gold capital flow here. Capital flow on gold. And you can see this is just a straight shot up here. So they stalled here for 3250 for a few days, and then there was straight shot up again. So massive moves here from that 3000 level. They took out 3000, and man, they've been on fire since. We had a few days here where they ran it higher to the 3150s and then pulled back. A pretty hard reverse retest of the 3000, and took it quite a bit lower, and then straight up. So anytime things move like that, you can count on a potential violent retracement at one point. And it's not sure that when that happens, but when it happens, it's going to get violent. So at this point, I would say still stay on the long side of the market, watching that the London low at the 3325s. So looking to buy weakness to get started against the 3340s, 3338s, 30s, down to the 25s for rotations back up. If they take out that 3325s, I would start looking for a retracement trade to the downside. But they have pretty hard move to the upside here. And yesterday's trading was nothing. I mean, I tried that short trade and after the big overnight move into yesterday, but yesterday turned into be more of a continuation day. That's unusual in gold. Most often you get a retracement on that overnight. So the overnight again extending, and the London session already retraced the overnight, so it could go either way here. So not quite sure, but if it's what I do know is they take out that 25, 33, 25 level, I think we're heading lower at that point. So looking to buy against the 38s, the 32, 33s, and the 35 and the 25s for rotations back up, and below 25s, hop on the short side and see how far they want to retrace this. Not going to be very aggressive on the short side up here. If you start seeing some strength, short opportunities at 47, 55, and the 58. But we are in such a strong move out of the middle. I'm probably not going to be aggressive about those at all, if at all. So it's just when the market is that volatile and that strong, I just kind of stay on the sidelines. But definitely, if they start taking out these lows at the 25s, yeah, then that sets up a potential nice move to the downside. So, and then oil, just kind of holding in the range. That's slowly been grinding higher, given I guess the recession fear tapering off a little bit. But they've been grinding back up a little bit. So looking for a retracement here. They're getting close to it. They're right up here at that upper edge, the 6350s. So if they keep going, I'm going to be looking at the retracement trade, maybe back up and reverse retest of the 65s. So that would be more of a technical trade, I think. I don't think anything there really. There's nothing fundamental driving oil unless you have a geopolitical event or something like that, or the Saudis or something try to cut off supply for unexpectedly. But I think that's setup is pretty stable, and if we can get the covering this issue with the Iranian oil coming off the market, covering that with Saudi oil right now, and the prices are going to be on a steady trajectory to the downside. So these moves to the upside, if you're thinking more long term, could be nice selling opportunities for rotations back down. So, but we are up against that an area right there at the 63.50s. If that comes out, I would in the short term look for a move to the upside and see how far they want to retrace this. So starting off from the long side, looking to buy weakness, 62.90s, 62.60s. And I think that's about it. Below 62.60s, I'm going to look for moves back down here to the lower edges. They could be short against the 63.40s and the 80s for rotations back down. But if they start squeezing this to the upside, we may see them run up here and squeeze this whole low volume area all the way up here to that 65 level. So we'll see how that develops. But those are the options. So right now, I'm going to be looking for the short opportunity. And if they keep retracing, I'm going to shift that back to the long side. Now, today's the last day on the May expiration on oil. We're rolling that after today to the June expiration. All right, back to the ES. And so far, back this little pop back down there to the mean. And let's see how this whole thing shakes out today. Are we going to get a strong day, range bound, or we're going to see further continuation of yesterday? Oh, I just had to wait for a few hours of the day to kick in. There's no news right now to drive it one way or the other. I think it's more the sentiment of the market going into the weekend and any headlines that comes out throughout the day. So there we are. I'm going to wrap it there. So good trading. And a couple of more minutes and we get the news. And then that's all the news we get for the day. So all right, good trading, guys. I'll see you back at 11:30 for the next update. Later.